We are live. Good morning from Los Angeles. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern, with the exception of next week. Next week, I'm traveling. I'm going to be in Tampa, Florida from Wednesday. I have an early flight and coming back on Saturday. So with my apologies, I have to do some other business, take care of some other business. Actually, I'm going to put a video on the other channel about what I'm doing, where I'm going to be, and you're invited if you're in Tampa or in Florida or close by anyway. But, go check the other channel for the information regarding that. This is a finance channel. This is a trading channel. This is a learning channel, educational channel. It's not financial advice. It's not trading advice. Let me put my phone on mute because it's going to keep going click, 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 because it's my life all day long. So welcome to Power Hour. How's everybody? It's Friday, and we had a lot happen this week, and I'm going to talk about the topics as usual, answer your questions. Please save them to the latter part of the show or the end of the show. Also, share my positions, share my, watch list, the usual stuff. But I'm going to talk about 7 or 8 topics. I'm going to keep it short today, about 5-6 minutes each. So, as I said, Power Hour is every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Many thanks for the support on the channel. It's growing slowly. Just hit 1,500 subscribers in about 4 months. I think it's pretty good. I mean, it's not like we're blowing up or anything, but, slow and steady. Channel is growing. You can all help me by what? Sharing the videos that you like, sharing the Power Hours that you like, sharing Trading with Sergio on Mondays you like. So, going forward, the schedule is going to be, with the exception of upcoming week, I will be back on Monday morning, 10 a.m. Pacific, 1 p.m. Eastern for Trading with Sergio. Members only live is not going to happen this week. So we moved the members only live to every Wednesday, 10 a.m. Not 10 a.m., 3 p.m. Pacific, 6 p.m. Eastern, and back to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. So I have 3 live streams going on every week for this channel. Actually, I'm doing more work for this channel than the other channel. However, I think it's worth it. I definitely think paying it forward, teaching you all how this game needs to be played is definitely worth it. Financial freedom comes with education, information, and I think I'm providing plenty of that. Why not? I have the experience. What am I going to do with it? Right? Might as well share it. And experience doesn't pay the bills, though, right? You have to get your car and get in the race. And as many of the members could attest, they have learned quite a bit. And being a member is accelerating that process, because the members only live, which I messed up, opened it up to the public. The public had a clear view of what happens on members only. So becoming a member is easy. Click of a button. You're a member of the channel. I think it's ridiculous value, to be perfectly honest with you all. So you get 2 things, 2 perks for becoming a member. 1, you get a live stream every Wednesday, 3 p.m. Pacific, 6 p.m. Eastern, members only live stream. 2, you will be sent the t-shirt I'm wearing. #KnowYourWorth t-shirt, free of charge, including shipping. All you have to do if you become a member, or if you're an existing member and don't have the shirt, you have to email me, sergio@sergioavadian.com, your t-shirt size and your physical address, and we will make one and ship it out to you. Why? Because we all wear it. We all wear it on Members Only Live. And so now I'm thinking we need to come up with a name for Members Only team. So we all wear our shirts and we do exchange ideas. They get a lot of information. They get a lot more hands-on interaction, more one-on-one. So, consider becoming a member. If you're not a member, consider hitting the like button, consider sharing. That's how the channel is going to grow, word of mouth, unless one of my videos hits 1 million views and then I blow up. But it's YouTube. We don't know when that happens, if it will ever happen. But like I said, 1,500 subs in about 4.5 months or whatever it's been. It's pretty good. So with all that said, and let's see if I have any other business to take care of. No, that's it. It's we're coming to the end of the year. I am not taking too many directional trades. I'm having a little bit of a drawdown at the end of the year because I have some index puts that are expiring a couple of weeks, but then that will lower my tax burden. I'll definitely will take the loss on those unless the market pulls back, but doesn't look like it. Another all-time high today. It's been a strong year. I can't complain. And at the end of the year, I will share my actual trading account results with you, probably last week or the first week of January. Because what I do is at the end of each year, I'll analyze it for a week before I start trading early January and see where I messed up, see what I did right, what I did wrong, improve the game for 2025, 2024. Look, 2024, if you didn't make money in 2024 while everything is going up, your chances of making money is pretty difficult then. Because literally you could have thrown a dart on the board in 2024 and you would have made money. And believe me, markets don't function that way. I can assure you they don't work that way. I'm not bearish. Markets all-time highs. How can you be bearish? I'm bullish. But trend is your friend, but markets do not function that way. So always be mindful that a rug pull will always happen. But 2024 has been the year of buy the dip. Any dip, any 5, 6, 7% dip in the indexes, you could have bought, and look where you are. Since actually last, I would say October, right, when the market bottomed, when the Fed stopped raising rates, I think market's up, I think like something like 52%. When I say market, the index, the benchmark, the S&P 500, unbelievable, right? It's just an index. And then if you happen to be, lucky and tag along a Carvana or a Kava or a Palantir or, I've been talking about these stocks, or an Upstart or an Affirm. So, you would have done 5x, 4x. These over a year period, these are amazing results. Look, not every year is going to be like that, but then that's why I'm here, because I know it's not like that. And when things turn around, if they turn around, when they do, it's not about it if, it's when. I want you to all be ready to understand how the downside works and how we can make money on the downside. We don't have to just make money on the upside. We can make money. Actually, we make money on the downside faster than we make money on the upside. So I'm going to prep you all for that when the time comes, right? But at least I'm giving you the tools to make money on any type of market, sideways, up or down, because there are ways to take advantage of all market types. And in fact, when I show you my positions today, one of the positions is exactly that, right? And all I'm looking for is time decay, because time is on my side when I do certain option strategies. But before I keep babbling on, please become a member. Take your shirt, come to Members Only Live. You will learn a lot. And if not, please subscribe. Please share the channel. Please share the videos and help the channel grow. That's all I can ask. So I'm going to start with, there is a huge crossover crowd here, I'm pretty sure, from the other channel to this channel. And I'm going to start with something that happened yesterday. What is that? Well, I'm going to call this, are disruptors about to get disrupted? Well, you all know what I'm talking about. You all know about, Uber and Lyft. But now I'm not going to talk about rideshare. I'm going to talk about how they're about to get disrupted, and Wall Street is not liking what they're hearing. So the connection is always there, right? Lyft and Uber are both public companies. We have to pay attention to their financials. We have to pay attention to their earnings reports. And we have to pay attention to the economy, because it's discretionary spending. People are spending, using their services, ordering food or groceries or taking trips to airports and things like that, right? Well, I pay attention to all of that. I listen to the earnings conference calls, but now there's a new threat, it seems like. And Wall Street is kind of going, hold on a second. This could be disruption. Well, as we know, Uber and Lyft came along and disrupted an antiquated cab business 12 years ago, 14 years ago. And look where they are now. Uber is a $150 billion market cap company. Lyft is, I would say, right about 7 billion at the moment. We're talking billions, right? We're talking market capitalization of hundreds of billions of dollars that could be threatened with what's coming. Well, what is coming? It's something called Waymo. It's something called autonomous vehicles. And it caught my eye yesterday that it was the first time that I saw Lyft and Uber get clearly liquidated by institutional money. It was no joke, okay? Moves like that don't happen. And why was that? Well, it was because of this. You guys see this thing on the left? Okay, that's a Waymo. I've been in one for about 6 or 7 times already. And the one on the right is the newest threat. It's the RoboCab by Tesla. Well, these two are going to be the disruptors if Uber and Lyft is ever going to get disrupted. And yesterday, Uber is trying to go to bed with Waymo, and they're going to launch in Atlanta. But then Waymo, out of the blue yesterday, said, "Oh, by the way, we're going to launch in Miami." Well, Wall Street did not like that. Now, RoboCab is something that's probably more into the future, but these are threats. Why? Well, at the moment, both companies can charge whatever they want to the rider and pay as little as possible to the drivers. Well, when that happens, they will need to own fleets. Most likely, they're not going to own fleets. They're going to rent their network or the marketplace or the platform to Waymo and put Waymos on their platforms for riders to order. Okay. Well, do you think their profit margins are going to get squeezed? Uber's profit margins? Of course they are. Right now, their take rate is 30, 40, 50%. Do you think Waymo is going to pay Uber 50% just to use the network? No, it's going to probably throw them a couple of bucks here and there for each trip, and then we're going to move on. I can't just deny the fact that the threat is real. And look what happened to their stocks yesterday. What happened? Uber yesterday down $6.93, down 10%. By the way, since Uber hit 85, it hadn't had an up week. It's been just dying. And what day was that? That was the day when Elon announced the RoboCab, and Wall Street said, "Oh, this is not a threat. This is not going to come around." Well, look where we are now. Down to 65. Stock is completely breaking down 10%. Now, let me put 10% into perspective for you all, okay? And the one on the right, Lyft, down 10% as well, okay, to 15 and a half. Let me put the Uber numbers in perspective, more than Lyft. Uber has 2.1 billion shares outstanding, okay? So that's how you get the market cap of $150 billion. The day before, it was like 74. So $74 times 2.1 billion shares is right about $150 billion market capitalization. Yesterday, stock was down $7, just about roughly. $7 times 2.1 billion shares is 14.7, $15 billion of market capitalization got wiped out yesterday. Why? Because Waymo said, "Oh, we're going to Miami too now." Now, is it an overreaction? Possibly, but Uber is ripe for the taking. Now, I don't know if Waymos are going to come, autonomous vehicles are going to come and dislodge everybody and replace everybody. I don't think it's going to happen because I don't think they can create the scale and density of these companies that they have now. But Wall Street is not liking it. I always listen to the stock price. When the stock goes down 10%, on top of what it's been going down already after the last earnings report, which you all can go listen to the conference call, by the way, for both companies, scoreboard, stock price don't lie. And today, after a big down day, you would expect a little bit of a bounce. It's not really bouncing. It's only up like 30, 40 cents. So it seems like the disruptors are about to get majorly disrupted. And we'll see. Time will tell. I am not a buyer of Uber at this price. I need to wait until the dust settles and see where we go. So question of the year has been so far, for me anyway, what the Federal Reserve is doing. They're cutting rates. They cut it twice already, once by 50 basis points, once by 25 basis points, right? Why are they cutting rates? They're cutting rates to manage something called soft landing, because they kind of feel like economy is kind of slowing down, and they're going to try to achieve something that not too many Federal Reserves have been able to achieve in the history of this country. Soft landing economy. Are we going to go soft land, or are we going to crash and burn? The Fed's cutting rates. So when the Fed's cutting rates, crash and burn is kind of, there's always a saying, don't fight the Fed. When the Fed cutting rates, you don't fight that. What you do is you observe. You try to understand why they're cutting rates. Are they cutting rates? Well, the history says that every time Fed cuts the rates, it's because the economy is slowing down. Well, unemployment numbers came out today. They weren't too hot. They were better than expected, but then I'm pretty sure next month they'll get revised. Every other number, inflation numbers are not too hot. They're still running at 3%, which is above the Fed's target of 2%. But now, oddly enough, the whole globe is cutting interest rates, right? From Korea to Japan. Well, Japan is increasing rates because they're dealing with a little bit of an inflation after 20 years of deflation. But the global central banks are cutting rates. Okay, well, global central banks don't cut rates if the economy is bangers, if the economy is doing great. So Fed is trying to manage something called a soft landing. Is it going to happen? Well, if you look at history, I don't see too many soft landings in the history of the Fed or this country. It is a really difficult thing to do. And if they do it, my hat's off to the Fed. I mean, you guys know what I think about the Fed quite a bit, about them, printing machines and the federal deficits and debt, and national debt, that's a different topic altogether. So soft landing or crash and burn? Well, we're going to find out soon. Cutting rates is definitely going to help if we're going to soft land. And the odds of, so as you know, there are betting sites now. One is called Kalshi, at Kalshi. Like you could have bet on the presidential election. You could bet on Bitcoin, where it's going to be. It's literally like a gambling site. So the odds of U.S. entering a recession before 2026, next year we're in 2025, okay, are down to 38% on this betting site. This was the betting site that people were betting on Trump and Kamala race, right? So since November 1st, the odds of the U.S. entering a recession before 2026 have fallen from 53% to 38%. That the top at 53% had happened to coincide, by the way, with the Fed start cutting rates. So what does that mean? Fed is trying to manage a soft landing, okay? In other words, the prediction markets no longer see a recession as the base case in 2025, which it did in 2024, mid to early 2024. But now that the Fed stepped up and cutting rates, okay, the odds are going down. Again, this is a betting site. I'm not putting too much weight on it, but now this becomes the question, is a soft landing attainable? Well, if it's attainable, it's this time around, right? And the stock market is buying it. Everybody in the stock market, every analyst, every major brokerage house that comes on CNBC and sells their book and talks their game is talking about a soft landing. So, meaning what? Soft landing is priced into the markets. Now, my thought process is I'm always looking into the future. What happens today is not my concern. I'm trying to read the tea leaves and look into the future. And what if we don't get a soft landing? We don't have to crash and burn. What if we get a massive economic slowdown? We don't even get a recession. What happens then? Are the prices that we're seeing today on the S&P 500 and the Nasdaq and everything else, are they justified? I don't know. Time will tell. But at the moment, everybody on Wall Street has bought into the idea of soft landing. And to me, I'm not going to question it. until, until I see otherwise. My thought process is always trade what's in front of you and take advantage of certain things that you're seeing, as opposed to, create personal biases, like, because we're human, we create personal biases up or down. There are perma bulls in the market, that the market always goes up, only goes up, it never goes down. I'm like, okay. And then there are perma bears, permanently bearish. They, those are the people that you go back and tell them, yeah, a broken clock is right twice a day. So I'm like, there are those both camps. I'm definitely not in either camp. I just look, I analyze, I position size correctly. I pay attention to the 3Ps, right? Remember that: patience, position, and planning. And then I take my trade. Am I right all the time? Hell no. But I'm not supposed to be right all the time. But if it was a year like last year, when you bought a Carvana at $30 a share and sold it at 200, I'm like, yeah, in my long-term portfolio. When I bought Kava after I ate there at 30 and sold it at 180, sure, it's easy money, right? But now, April comes, man, I'm going to pay like some long-term capital gains taxes, because I made sure when I sold it, it was a year and a day after I bought it, because there are short-term capital gains, long-term capital gains. I think I should do some videos and educate you all about that. The difference is immense. Okay, the amount of taxes you're going to pay is immense. So I've been talking quite a bit about this, the next generation of this country and what the future holds for them. And look, I'm an immigrant. I'm blessed to be in this country. The country has given me everything I have. Yes, I've made some boneheaded decisions. Yes, I've made some great decisions. However, it's only possible in this country. It is. Okay. As much as I hate what's going on now, as much as I hate the debt, as much as I hate the way the fiscal policy and monetary policy is, that's not everything, right? We have freedom in this country. We can say what we want, when we want. And the repercussions are not that somebody's going to come and chop my head off, right? So I love it, right? I have the right, everybody else does. I have the rights that a billionaire does. So my thing is, be blessed, feel like you're blessed. And I do feel like I'm blessed. But then there has been this destruction of the American dream. What is part of the American dream? Is the American dream of home ownership dying? Home ownership is an important thing. You have a roof over your head and you can participate in the equity gains, equity build, right? I bought my house 23 years ago. I think I paid $800K for it. And then we had the 08 debacle. I think the price went down to, I don't know, 600,000. But then it's your roof. It's where you raise a family, right? That's your dream. Not this white picket fence thing that, people talk about. But what is happening to the new generation? I have a daughter that's going third year of college. Well, hopefully she's going to be a great, addition to society and improve society. And hopefully she's going to make tons of money, right? As she should. She's learning, or she's going to be a biotech engineer. And I'm like, okay, great. Well, any, married couple these days, even with two decent jobs, can they afford to buy a house? So when I bought my house and then it went down, I didn't care. I was going to live here, raise a family. So that was my dream. And my dream is coming true, obviously, right? And now, after 23 years, I'm pretty sure the house is worth double of what I paid for it. But then, is it truly a double? It's not. Why? All it has done is keep pace with inflation. We have 6 or 7% a year in inflation, or debasing of the currency, or our dollars are losing value by 6 or 7% a year. So if you take that out, yeah, maybe there's some equity gain, but that's not the point. You don't buy a primary residence. You buy it because it's part of your dream. You're, starting in life. You got married. You're going to raise a family. Of course, you want to own a house, but then it's becoming like that dream is not too attainable these days. Why? Because of the affordability of homes and what's happening. So as of last week, U.S. home sales dropped by 128,000 in October to 610,000, the lowest in 2 years. Well, there goes your dream, whoever wants to buy. But there are reasons for that. New home sales declined by a whopping 17% month over month. At the same time, the median new home price jumped, keeps going up. Well, this is the median, people, 437,300, the highest since August 2023. And the average interest rate on a 30-year mortgage hit 7% this month. Well, that's exactly why the home affordability index is in the toilet. Now, if you're just, starting life, let's say you're 30 years old, finished college, got married, got a couple of decent jobs, husband and wife both working, and can you afford to buy a house in California? Can you? No. And so the headline of this should be, is the U.S. housing market freezing? Well, the American dream of home ownership seems like it's going away. Can a couple in their 30s or late 20s, early 30s, out of college, educated, good jobs, buy a house in California? Let's say a starter house. A starter house in California these days, 1,200 square feet, in an okay neighborhood. We're not talking Beverly Hills. In my neighborhood, let's say, a 1,500 square foot house is selling for $1 million. Well, in order to get into a house for $1 million, 20% down is 200,000. Where does that 30, 35-year-old has the 200,000 saved up already? Assume they have it saved up. You have an $800,000 mortgage on a 1,500 square foot house. Well, we know at 7% what the 30-year fixed rates are on that, what the mortgage payments are. You have property tax of $12,500. You have utilities. I mean, just a house alone, the rule of thumb is that owning a house, you should not put more than 30 to 33% of your income after taxes into your house as a payment. Well, it's not there. So, is the dream dying? I don't know. I think it is. I mean, I look at my daughter and son, by the time they become business owners or start working somewhere, how can they afford $1 million, $1.2 million, $1.3 million house? I mean, even in the worst neighborhoods, there are no homes in less than $800,000 in California. And why is that? That's because of the currency debasing. That's because of printing machines going overtime, and that's what happens. Primary residence should not be an inflation hedge, but that's what it has become. And also, all the billionaires buying all the land, all the homes, BlackRocks, things like that, they all made us renters. So they control pretty much everything. So I feel for the new generation, actually. I really do. And I think the American dream of all home ownership is on the rocks at best. If not, it's truly, truly becoming a dream as opposed to anything else. And so one of the other topics I want to talk quite a bit about on this channel is the markets, right? At the end, when I do my watch list and my positions and whatever not, market, I think today is hitting its 56th or 57th, if I'm not wrong. You can correct me there. You can Google it. How many all-time highs has the market hit this year? Ridiculous. Not ridiculous. Ridiculous in a good way if you're long. And but besides that, what's happening is that the U.S. market in general, okay, the S&P 500, the Nasdaq, and the Dow Jones, and is dominating, completely dominating the global markets. And how's that happening? Well, people feel safe investing in the U.S., in U.S. stocks. A lot of money has poured in over the last year and a half into U.S. stocks. That's reality, okay? And that's one reason. Why is that also? Because our U.S. dollar is reasonably, not domestically, but globally, is the reserve currency of the globe. So transactionally, it's pretty easy to, exchange your, let's say, Japanese yen or euros and invest in the U.S. because U.S. stock market has outperformed every single stock market by 3x, okay? You can look at the DAX in Germany, and you can look at the S&P 500. You can look at the Nikkei in Japan, and you can look at the, Nasdaq in the U.S. Domination, without a question, right? And the world is seeing it, and the world is pouring money into the U.S. and extending that domination, honestly. And it seems, look at this. I mean, look, I had my hats off to the Corbisi letter. They're on Twitter. Please go, become a follower on Twitter. I'm on Twitter, so my tag is in the show notes. Please follow me as well. I'm quite active. And look at the chart on the right. Look at that thing. I mean, that thing is just, so there is, on this chart, there is two ovals, two circles. This chart goes back 75 years, by the way. Okay. It goes back to 1950. And last time, so the blue line is one standard deviation over the mean line. Okay. So the average is the middle red line, one standard deviation above, one standard deviation below. Every time we are one standard deviation below, it's a good buying point. Every time we're above, it's a good kind of let's take profits point. And so the last time the Nifty 50 bubble happened in 1960, 66, 65. After that, the next one was the dot-com bubble, internet bubble. But since then, look where we are now. Look at that arrow going up. It's almost become parabolic now. So this is 75-year high in U.S. stocks versus rest of the world. The U.S. market is dominating all other markets, and currently the U.S. global equity ratio, that's the ratio, by the way, the blue line that you see with the arrow, the ratio of global equity to U.S. is 3.2x now. So U.S. stocks are 3.2 times of all global markets. Think about this, people, just the U.S. The ratio has doubled in the last 8 years as U.S. stock market returns have significantly outperformed global benchmarks. To put this into perspective, the long-term average since 1950s has been just about 1.1x. Think about it. We're at 3.2x. Since 2008, when the financial crisis took place and the Fed started the printing machines after the great financial crisis, U.S. equities have outperformed the global equities by 400%. So U.S. has been the place to be, obviously. And the key for that to understand is, now some of you may say, well, Sergio, everybody's in. Well, how do you know that? Not everybody is in. Money keeps pouring. And when money comes in, by the way, to the institutions, what do they have to do? They have to invest. Market high, market low. We're not trading here. I've said this a million times. Dollar cost average over years, you're going to make nothing but money. I mean, 10, 12, 11% a year. If you invested even 2 years ago, you made 50% on your money. Does that mean going forward, we're going to repeat this 25% a year now? No. I mean, looking at that chart, it's kind of in the nosebleed section. Everything returns to the mean at some point. Is it going to be in my lifetime? I'm not too smart to guess that. I'm not going to gamble on it. I'm not going to create a personal bias and say, oh my God, the whole world is in our stock market. What if it starts going down? Then the whole world is going to sell it and take their money back and take it back to their country. I'm like, when that starts happening, I'll be here telling you all what to do. So there is nothing like that that's happening. So all the perma bears out there, you can create all the biases you want. You can make all the excuses you want. You can, read the tea leaves any way you want. And if your conclusion is going to be that market's going to crash. Market's going to crash. I'm like, yeah, it will at some point. Something will happen. But then that's like that yesterday off the coast of Oregon and California, there was a massive 7.0 earthquake. There was a tsunami warning. That's like telling that the market's going to crash is something like guessing that there's going to be an earthquake. How do I know that? I don't know that. Market right now is all it's doing is all-time highs. I'll just go with the flow. I'm not interested in creating personal biases and guessing and all this stuff. It's not for me. So the biggest thing actually that happened this week is what I've been talking about, Bitcoin. Does anyone not know what a Bitcoin is or what Bitcoin is? No, I don't think anybody, well, maybe some people around the globe who don't have internet or whatever. I don't know. If you're hiding under a rock, maybe you don't know what Bitcoin is. Well, what happened to Bitcoin this year? History took place. First time ever, we just hit 6 digits. In fact, I'm going to check it on my phone now. Let's see if we're over 100,000. Because I have yes, look at it. We're up 4,400 from yesterday. We're at 101,530. Because one of my positions depends on this price and what's going to happen by 1 o'clock today, and I will explain it to you all. So, first time in the history of Bitcoin, we hit 6 digits. Here's my thing with Bitcoin. I put so many wonderful videos. I explain what MicroStrategy is doing. I explain how to trade it. Please go check it out. Please like it. Please share it. I think it's gold. It really is so much valuable information there. So Bitcoin cracks 100,000 first time, 6 digits. Okay, great. Here's my opinion on Bitcoin. I've been talking about it, right? So what did Bitcoin do? Bitcoin went sideways between 55,000 and 72,000 for 8 months, April to now, this week actually. And overnight it cracked 100. Okay, now, for my money, Bitcoin should not be traded. Bitcoin is not a trading tool. Bitcoin should be bought and held. Take it off the exchange, take custody, put it in a cold wallet, done. Dollar cost average, put into $50 a month, $100, whatever you can afford into Bitcoin. And that 100 should not be more than 7 to 8% of your total assets. I have now it's actually 10%, because the higher the price goes, the Bitcoin I'm holding is becoming more valuable of my total portfolio, bigger percentage of my portfolio. Am I going to sell it because of that? Absolutely not. I will never sell Bitcoin. Okay. Am I going to trade it? Oh, look, it went to 104,000. Then it dropped to 95,000. I'm like, no, I'm not. Because why? Because there are so many other things to trade around Bitcoin that are more volatile, that give me better opportunity to do so. Those I will trade, such as MicroStrategy, such as the ETFs of MicroStrategy, which I'm involved in. You guys will see in my positions. But it was history. Bitcoin officially hits 2 trillion in market cap for the first time in history. Now, we can compare this to other markets, right? Is 2 trillion a lot? No. 2 trillion actually is minuscule compared to the stock markets, the bond markets, right? Gold markets. It's really a minuscule. 2 trillion is nothing. And I think in 3 to 5 years, we're going to look at 100,000, and it's going to be the dollar that it was 10 years ago. Okay? Because Bitcoin adoption by corporations is increasing. Bitcoin adoption in general by the public is increasing through the ETFs. And look, I'm not going to guess what it is, but technically speaking, and if you guys go watch some of the power hours from the past, what did I say? This is a base or a massive top. We'll find out when it breaks out. Well, what happened? When it broke 72,000, if you want to technically look at it, what happened? Quick run to 100, cracked, and then it spent a week and a half at 100. Everybody was saying, oh, it's having trouble. There's a wall at 100. Well, now 100 wall is gone, right? So my opinions on Michael Saylor and what he's doing is pretty clear. You all need to go watch those videos and get an education. But congrats to all the Bitcoin holders, including myself. We're at 101,000 and change. And I want to go back to that betting site again, because I'm kind of enjoying that betting site. You know, I'm not going to use it at all, but I just look at it. And so on Kalshi, the prediction markets now see Bitcoin rising to 128,000 by year end. So I really don't know, but I will enjoy it if it gets to 128,000 by the end of the year. I think the end of the year is pretty close, right? I mean, but then as we know, Bitcoin trades 24 hours a day, 7 days a week. It never is closed. So could it happen? Of course it happened. But Bitcoin, to me, is not a trading asset. The surrogates, the proxies of Bitcoin are definitely it. IBIT, BITX, MSTR, MSTU, MSTX. All these are the ones. Now I've added MARA, Marathon. All these things. And companies now are using Bitcoin as a corporate treasury asset. There are 60 or 70 companies are doing what Michael Saylor and MicroStrategy is doing. The adoption is clear. And yesterday, by the way, Trump appointed a VC billionaire, Mr. Sachs, as the AI and crypto czar. Like, okay, he's a super friendly, crypto friendly person. And the person he picked for the SEC chair is also super crypto friendly. Now, the talk is that the US could lower the national debt by creating a Bitcoin national reserve, or the US dollar could be backed by Bitcoin. I mean, it's not going to happen. That's ridiculous opinions, actually. But what I'm saying is that don't trade Bitcoin. You buy it, put it in your cold wallet, and you go, you just leave it alone. And whatever you can buy. This is dollar cost averaging up, because every time you go, oh, if it goes to 80,000, I'll buy it. Just don't trade it. Just buy it and hold it. That's it. That's it. And then come back in a couple of years and then look where we are. And I am bullish on Bitcoin. I have been bullish on Bitcoin for a long time because I do understand economics. I understand the finite amounts that exists, and I don't want to trade it. I want to buy it. I want to leave it for my kids, and that's it. You know, if I'm not going to leave them anything else, Bitcoin is it. And take my cold wallet and do whatever you want. Maybe that would be the down payment for their house, because they cannot afford to buy a house. How about that, right? Okay, so next topic I'm going to talk about is 2024 is coming to an amazing close, right? What was the year of 2024 starting early 2023? What was this? These 2 years, a year and a half. It's what? Buy the dip. Buy every dip. We had a massive dip with the Japanese carry trade, debacle, right? I mean, Nasdaq sold off 15%, S&P sold off 11%. There have been a little small, like 2, 3, 5% sell-offs in between. But if you bought every single dip, you would have been well off, well off, right? So is that going to continue? So if 2023, latter part of 2023 and early, all of 2024 was buy the dip year, is 2025 going to be, again, another buy the dip year? Well, we will know once we get a dip. We're not even getting the D of the dip. We just keep making all-time high after all-time high. So I guess, yeah, right? I mean, who am I? What am I arguing with here? Mark is making 56, 57th all-time high. Somebody Google it and put it in the chat. I don't know. I think it's 56 or 57. But who cares? This is an all-time high. So is 2025 going to be one of those? Buy the dip. Just buy every dip. Just hold it like this. I go, send it. I'm like, okay, I bought the dip. And then 2 weeks later, I'm swimming in cash. I'm like, okay, cool. I mean, you could do that with individual stocks too, and in which I do show my watch list. Those are all buy the dip type of uptrending or downtrending issues. Either you buy the dip or you sell the rally. Well, it's been the year of buy the dip. Is it going to continue? Well, let's see. There is a thing they created, by the way. It's called a euphoria meter. Okay, this is no joke. This is serious stuff. So what is the euphoria meter saying? And this goes back to 1992, by the way. This is not something that just created like Kalshi, the betting site, right? Euphoria meter is an indicator measuring investor sentiment. Hit a record 1.1 points, right? This metric uses S&P 500 forward PE, which is standing about 26 now, which is extremely high. But then the earnings are supposed to be up 25% this year to 275 on the S&P 500, the forward PE, the volatility index VIX, which I quite often have talked about, and the bullish sentiment from investor surveys. Okay, so that measures that. So that's on the right-hand side, that's the red line on the chart. You guys see where it's at? I circled or I put an oval on it. This has never been this high. And the top chart, the black chart, is the S&P 500. Okay? And as you guys can see, every single dip, actually every single potential massive dip since 08, it's been a buy. There has been like these little hiccups you guys can see, and the big hiccup was like the pandemic, obviously. But look at this, every single time, every single dip. Okay? And this goes back to 92, but since 08, any dip you buy, your dollar cost average into an ETF, you're doing great. But the euphoria meter now is sending warning signals. Again, these are all, little analytical tools that you pay attention to. You don't get stuck with one because it creates a ridiculous amount of personal bias. And you're going to go, oh my God, euphoria meter is 1.1. I should short the market. I'm like, no. Euphoria meter is just another thing, like the CNN fear and greed index. I don't know, all these things. Now, what do I watch when it comes to these types of things? Okay. But to finish this, bullish sentiment is unbelievably strong. So if everybody is bullish, okay, if everybody is bullish, who's bearish, right? So you have to always think the other side, because that's what Warren Buffett has done. That's how he's created his wealth. What did he say? When there's blood in the streets, I'm a buyer. Well, there is no blood in the streets. There's nothing but the euphoria meter going through the roof, right? Now, as far as I'm concerned, what do I watch when market's getting a little overheated? I have certain indicators that I watch. One, I watch the equity put call ratio. You guys can Google it. It's freely available. You can get it from the CBOE website or Nasdaq website, okay? Put call meter right now is about 0.6. 0.6 is very, very low, meaning everybody's into calls, okay? Another thing I watch is AAII Investor Sentiment Index. Those are the numbers that AAII puts out as far as how many investors are bullish. Man, when I say investors, these are all mutual funds and you know, analysts, how bullish they are. So the more bullish they are, the more bearish you have to be, because you know there is a law of averages here. If we have 100 people in a room, okay, if 9 are bullish already, which sometimes the numbers get there, and at 0.6 and put call equity ratio is kind of saying that. And by the way, put call ratio tops about 1.3, 1.4. When it gets there, you buy the market. When it's at 0.6, you just kind of be really careful with it, because that means everybody is buying calls. When everybody is buying calls, what happens? Right? Okay, we all know the answer to that. So my thing is, I look at certain things, you know, if I'm going to take a stab at shorting the market here and there, but not euphoria meter. But then I thought I mentioned it. I think it's a, you know, pretty cool thing, because it looks at 3 different things combined that I do. You know, I look at VIX as well, right? It's a volatility index, and I would highly recommend you do that. VIX is down to 15 now. And when the market tanked, you know, during the Japanese carry trade debacle, it got up to like 50. So you guys got to pay attention to all these things. But that's, you know, that's for me to every week, every Monday, Wednesday. I will give you guys the warning when I see what's going on. And so 2023, 2024, buy every dip. In fact, since 08, buy the dip, go to the bank. Is it going to be like that in 2025? Look, man, over long periods of time, the most important thing is how much time you're spending in the market, as opposed to how much time you're spending timing the market. Timing the market is really, really difficult. Time spent in the market is going to give you the financial freedom that you deserve, and that's what you should do. That means passive investing. That means dollar cost averaging. That means picking a couple of ETFs and keep plopping money into that. And that's how you create financial freedom. Can you trade like I do? Yeah. Can you beat the benchmarks? Of course you can. But for the average investor, that's not what they should be doing. So the reason, by the way, the reason you know, globe is throwing money at our markets, where are they investing in? Are they going investing in individual stocks, or are they going into ETFs? Mostly it's going ETF. ETFs are what? Exchange traded funds. There are 800 ETFs that people have created. Okay. If you can't find one that's going to give you 10-12% a year, by the way, rule of 72 divided by the return you're getting, you're doubling your money every 6 years if you're getting 12%. That's the rule of 72. Don't forget about that. Is ETFs are the rage. ETFs are the tool or the conduit for you to dollar cost average, and in a very, very low cost basis, invest in your financial future. That's it. And exchange, there are 800 of them. I mean, the most well-known ones, obviously, we know is SPY, which is S&P 500 ETF, Triple Q, which is the Nasdaq 100 ETF. You know, and those are the 2 major ones that people know. Those are the benchmarks, but there are so many ETFs that you can rotate in and out of. But my recommendation is pick 1, pick 2, pick 3, you know, plop in $50 a month, $100 a month in there, and come back in 25 years. You'll be fine. But these ETFs have become the $10 trillion gorilla. 10 trillion with a T, people. US ETFs posted 155 billion of inflows just in November, only in November of this year. 155 billion more came into the markets. This is double the previous 10 months average. So that means everybody's in now. Should you be cautious about the market when everybody's on the same side, everybody's in? Probably, but then I don't see it yet. Inflows into the US ETFs averaged 7.3 billion a day last month, roughly 3 times above the historical average. So people are going to say, Serge, you always say, do the opposite. Yeah, this looks like 9 out of 10 people are bullish in the room. Well, if that last person turns bullish, what difference does it make, right? Unless it's a Warren Buffett with $350 billion. That's not going to happen. So as a result, total flows have reached 983 billion a year to date and are on track to exceed 1 trillion for the first time in history. It seems like everybody's buying into this passive investing thing, which is great. That's how you create generational wealth, okay? Period. You don't create generational wealth by zero DTE options and doing this and doing that. As a result, total flows have reached 983 billion. Meanwhile, total holdings, that's why this segment is called 10 trillion gorilla in the room. Total holdings of US ETF assets by the public officially hit 10 trillion for the first time, with a warning caveat here. Investors are piling into US ETFs. Okay, so we just got to take this with a grain of salt. Well, when people pile into the ETFs, these ETFs have to do what? They have to go buy the underlying stock. So if you, let's say, if you put in $100 in SPY, what is the manager of that fund or ETF is going to do? It's going to go buy those 500 stocks, okay, that make up the SPY, which is the ETF. That's why the market keeps making higher highs every day, because the money is coming in. It goes into an ETF. That ETF cannot keep it in cash. They immediately put it to work. They buy the S&P 500. They buy the triple Qs, wherever the money is going on whatever ETF is going. And, game is strong. I mean, I'm not going to question it, okay? I'm not smart enough to question any of this, except there's a group of people who are already billionaires, and mostly there's a group of people who are continuously supplying stock. Who are those people? That's one of the indicators I watch, by the way. It's an important indicator for me. Insiders. Insider stock sales have never been this high in the history of stock markets. For the past 6 months, including NVIDIA, insiders have been selling shares. Now, justifiably so. They're looking at the companies. They, most of them, by the way, are not selling because they think their stock is going to tank. They have these programs, right, called, I think it's called 51B. If they're automatic sales, when the stock gets to a certain point, they have it already, registered to be sold. But this is one indicator I'm kind of watching. Now, this indicator works much better when insiders are buying, without a question. So in 2008, when the GFC happened, insiders were buying their shares right and left because their companies were undervalued. Insiders selling, not as much, but at this quantity and at this level, it kind of is giving me like a little bit of a cautious attitude, because it has never reached this level. And look, they have made their company success. They deserve the wealth that they're getting, and they're cashing out. Are they cashing out completely every share that they hold? No, but there's a ratio, insider buys to insider sells, that kind of shows the general health of the market, because who knows a company better than an insider? If you're the CEO, CFO, CTO of a company, or CIO, whatever you are, any C or any executive who is entitled to RSUs. RSUs are restricted stock units or stock options. I mean, you're there every day, day to day. You know what the company is going to do. You know what the company is going to do in the future. So your livelihood depends on it, besides your paycheck, because these RSUs, restricted stock units, mean a lot more to them than the paycheck that they're getting, okay? So that's how they create generational wealth themselves. So when they're selling at a ratio that I'm seeing right now, it's kind of giving me a little bit of a warning signs. And this is again, the Kobeissi letter, hats off. US executives are selling stock at extreme levels. The ratio of insider sellers to buyers hit nearly 6x. 6x usually doesn't happen. Okay, the average is about 2x. Usually there's always more sellers than buyers, but I'm going to read the chart to you guys on the right, and you can keep an eye on it. The ratio of insider sellers to buyers hit nearly 6x, the most in at least 2 decades. This is a long period of time, people. You got to pay attention to this metric here. This is double the average seen over the last 3 years. This also exceeds the previous record of 5x seen in 2021 before the bear market began. When was that? When the Fed started raising rates, right? When the market, there was a bear market of 35%. After the historic market run, corporate insiders are taking profits on their own stocks. Why executives are selling so much stock? Great question. Well, here it is in the oval. That's 6x up here. Now, let's look at, this is the S&P 500 going back to 2005. Every time it dips, okay, this ratio shrinks. Why? Because insider buyers versus sellers, more buyers step up than sellers. Every time the bottom is in, that ratio shrinks to less than 2. In fact, it gets to like 1. And when it gets to 1, that means insiders are stepping out, buying shares, and they're not buying it with somebody's money. They're not borrowing this money from the company to buy. They're buying it with their hard-earned cash. That's a great sign. And every time the market bottoms, you can see that ratio dip. And selling is not a great indicator of a market top. Like here, let's say last time we reached over 5, market did not top for solid maybe 6 months after that. And then we had the bear market when the Fed was raising rates, okay? Now we're here, and the ratio is 6 to 1. You know, yeah, a little bit of caution. Doesn't tell me anything about the top of the market, doesn't tell me anything. But all these things are my tea leaves that I read, and I keep it in my head. Okay, what's my daily put call ratio? That's short term. Insiders are selling a lot. That's long term. What's the AAII sentiment? It's like in 30%. It's pretty bullish. So that means everybody is bullish. How much money is going into ETFs? So what I'm trying to do is I'm trying to give you guys a flavor of what kind of tea leaves I'm reading. Does that work on zero DTEs? No, of course not. But I want to have this bigger macro picture, right? And then once I create this picture in my head without trying to create any bias, I am not saying market's topping. I am not bearish. If any of you get that out of this, that means you're creating your own bias. I am not saying that whatsoever. Charts don't lie. Higher highs, higher lows. I am not smart enough to pick a top. I will let you all do that. So that's that today. Man, I squeezed that thing in like 55 minutes. That was awesome. Okay, cool. So let's see who's here. I see a lot of members. I love my members. By the way, the members thing is really cool. We all are wear shirts. So members and the chat in general, please email me, Sergio@sergioavadian.com. What should we name our group? We should name it something. I don't want to make it personal. I was like thinking Sergio's Traders or whatever, but no, we're not doing that. Forget Sergio. What should we name our group? Come up with a name, send me your ideas, and then maybe we'll create some t-shirts with that. And second t-shirt you get for being a member would be that. Kyle, are you here? Kyle wants his shrimp tacos. He's having a little amnesia. There you go. There's a perma bear right there. Yeah, okay, cool. Okay, so Lynn is here. Lynn just ordered her shirt. Thank you for being a member. Mojotronics is here. Edward Lee, another member. I love my members. Palantir to the moon. Yes, up another, I don't know, how much is it, like 74 now? I mean, I had Palantir in my long-term portfolio. I bought it at like 28. I sold it at like 62. I felt like I was a genius. And I'm going to pay tons of taxes on it. So that's 78. What is that? 16 points I left on the table, but I don't mind. I'm okay. I'm good with it. Not concerned. Techie B, Vic is here. Ernesto says, with potential multi-state lawsuits on the horizon for DoorDash, no, you can't trade puts and calls by this long term. I mean, I don't mind. You can short the stock if you want. But everybody knows this, Ernesto. If you know it, you don't think Wall Street knows this already, right? So don't create bias. I think you're creating a bias for yourself. So what I would do is definitely not trade puts. I mean, puts have finite amount of time, unless you're going to go buy leaps, which go out 2 years or so, or a year, 6 months, whatever. I wouldn't do puts. If you're better, short the stock. It's plenty of stock available to short. Those lawsuits, but are known by everybody. It's not a shock, right? Waymo was known, right? Waymo was known to the world until they announced, oh, we're going to Miami yesterday. Uber tanks 10%, loses 14, 15 billion in market capitalization. You got to think about these things. Hit the likes, please. Yes, please hit the likes. Please share. Please make the channel grow. WeZoom's a perma bear. Yes. No, he's not. WeZoom, I may get you your shrimp tacos. Likes. Yes, please hit the like. It helps the algorithm, according to Chris. Okay, let's see what one of my members says. By the way, the member lives are awesome. Okay, I put them on the window. Actually, I effed up. I screwed royally. I made the members live, didn't tag it members live. I left it open to the public, and I'm going like, how come there's so many people here? But long story short, so you guys had a flavor of what the members only live went. So please go check it. It's public. That's how the members only live goes. Maybe it'll convince you to become a member. Not to get the t-shirt, but that's an extra. On Monday, I asked about SATL at $2 a share. You looked at it and said it was a pump and dump. What indicators did you see? Was it a lack of volume? It's at 350 today. I'll take a look. Let me take that thing down. I am not too trusty of $2-3 stocks. You know what I'm saying? But I will explain that why I think it's a pump and dump. And what you should do while I'm doing that is go to Yahoo Finance and click on SATL and look at the statistics. Craig said, "Trend is your friend." You bet. You bet. You bet. Good thing I took advice on Uber. Yeah, I think you were on the last live, and I go, I don't like Uber at all. And sure enough, I hope you sold it. Okay, Wisdom says, I'm a contrarian, but hasn't worked out. No. You know when contrarian works out? When we reach extremes. And we're this whole year, we've been at the edge of extremes. So what happens is that market goes up, it should be a pullback. No, what happens is that the overbought situation gets taken out by the market going sideways. Maybe it goes down 1%, 2%, zig, 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 until the next high, That's how the market's coming out of overbought conditions. And I've seen it all year long. Take EB. House, all calls were in filled on Wednesday. So, okay, cool. Yes, please study the Greeks. Well, we're going to talk about the Greeks when I show you guys my position. It's very exciting. I have a stock that may get called away or may not get called away, and I'm going to ask for your advice. Let's see all the people who know the Greeks. The stock is MSTX. You all know what I did. I own 200 shares. I got, oh no, it's going to be taken away. Holy shit. Okay, well, I see Bitcoin flying. Hold on, I'm looking down. I apologize, but I need to, yeah. MSTR is 398 up. MSTX is 102. You know what? I have the 100 calls that I sold at 15. They're going to be 2. I'm going to ask, okay, there's a test coming up, quiz coming up for all of you who are watching right now. Let's see what you guys suggest, and then I'll take your advice at the end of the day. Tesla near all-time high. Yes. I'll take a look at Tesla as well. When I'm doing the thing, I'll take a look at Tesla. HAL options took longer to fill than I thought. Yeah, they're not. Well, especially that stock's options are not. This is $1.75 stock. Yeah, yes, they are awesome. I think you talk about the members meetings. Yeah. Martin Kate says, what do you think of SLDP for buy and hold long term? I'll take a look. Sir. SATL, SLDP. Any other stock recommendation? Not recommendations. It's ideas that you guys want me to take a look at the chart. Again, this is not advice, investing or trading advice. It's my opinion, only. All the topics I talk about are my opinion. You may agree, you may disagree, but that's why we have a market, right? So let's add this puppy to the stage. Here's let's take this off. Okie dokie. Hope you guys can see this. You guys can see it, I think. Okay, so here's my position screen. I'm long 13,500 shares of Howell. I sold a little bit more puts today, 179. They're going to expire worthless by December 20th, I'm pretty sure. Yeah, whatever. I mean, you know, I may actually sell that at the end of the year to lower my tax liability, but I will let you know before I sell it, so you don't get to be holding the bag. Or I will just keep it and then lower my cost basis by selling cover calls. I don't know. I'll make a decision. I have a couple 3 weeks to decide on that. If I'm going to take a tax loss and sell it, I have to do it by the 31st of the year. So if you do have losers, you want to take tax losses to lower your tax liability for capital gains, you should do that the last day of the year, or maybe actually do it 2 days before, because there is 1 day settlement. I have 45 of the Spider December 20th 600 puts. Index is 607. I have about 2 weeks and a day. I'm okay. But while I'm holding those puts, I've been selling weekly puts against it. Like these puts I sold this week for 45 cents. Every week I've been taking 45 cents, 50 cents while it may look like I'm losing some money on the long puts that I'm at, which I am. I'm lowering. I keep taking in money on the short-term puts. So as you know, I love selling premium. Okie dokie. And let's see what else we got. So as I said at the start, I'm not going to do too many directional trades with options because I've had a good year. I don't want to blow anything out. I like PLL. So somebody had asked me, I'm saying it again. I have 3 positions in my long-term portfolio now after selling everything. ELF is one. ELF, okay. I'm long PLL, starter position, okay, and Unity Software. Those 3, full position on Unity Software, full position, almost full position on ELF, starter position on PLL. That's in my long-term portfolio outside this trading portfolio. So now let's look at the dog of the dog, not dog in a bad way. So Bitcoin is the dog. MicroStrategy is the tail, and there are tails coming out of that tail. Those are the ETFs of MicroStrategy that move 2x up and down. As you all know, I sold tons of premium a couple of weeks ago. My MicroStrategy was at 540. I explained to all of you, there's a video that just came out yesterday. There's another one that's coming out today. Please check those videos out. Everything you want to know about MSTR, MSTX, MSTU, all of the explanation is there. Do not just check it out and share it for people who are interested in learning about MicroStrategy and its ETFs. So, as you all know, I like selling premium. Last week, I had sold, that means I think Tuesday or Wednesday, I had sold 2 naked puts on MSTR for a strike of 100. I had sold 2 MSTR 90 puts for last Friday expiration, and I had sold 2 of the 80 puts. So I was naked short 6 puts. The stock ended up closing at $98.70. Okay? I had naked sold the 100 puts at $10.75. I sold the 90 puts at $7.50, and I sold the 80 puts at $6.50. Okay? So the 80s and 90s expired worthless, meaning whoever bought it from me, they hit the wall. I took their money. I'm good. Now, because the stock ended up last Friday, under 100, somebody, as I was assigned, somebody put it to me, 200 shares, which is 2 puts, 200 shares of MSTX at 100. However, is my cost 100? No, because I had taken in $10.75 when I sold the puts. My cost on 200 shares of MSTX is right here, $89.26, because I took in $10.75. Okay. On Monday, this Monday, 4 days ago, what did I do? At the open, immediately, I came and sold 1. Now I'm doing covered calls against my shares that I have outstanding. I sold 1, equaling 100 shares worth. This Friday, today's expiration, $110 calls at $10 right here, $9.99, $9.56, so it's 10. And I sold 1 $100 calls against my other 100 shares at $15. Okay, Now, my cost is $89.25 on 200 shares of MSTX. Well, the 110 calls are expiring today. They're down to 25 cents to 40 cents. So whoever paid $10 to me, thank you, sir or madam. Now, on that 100 shares, I lowered my cost from $89.25 to $79.25. Okay. Right now, the stock is 102.32. Well, it's going to be exciting. If it's right at 100 or a little bit above 100, that 100 shares will be exercised and taken away from me. Okay. Now, let's look at that transaction. I got assigned at $89.25 because of the $10.75 premium on the put side. Well, I took in $15 more. So 15 plus the 10 is 25. Potentially, I could make $25 on MSTX if the stock, especially if the stock is under 100, those are going to expire worthless too, right? So I have two choices on the one that's in the money. One of them is in the money. It's above 100. What can I do? I have 2-3 things I can do. One, I let it go. Somebody takes away my stock at 100. My cost is $89.25. I sold at $115. This is a 2-week transaction. Fantastic. Meaning, so 100 shares at 100 is 10 grand. Well, last 2 weeks between the puts and the calls that I did is $25. That's 2,500. That's 25% for 2 weeks. That's like better than loan shark money. That's because of options. That's because of Greeks. That's because of the things that I know. So the other choice I have, one is let it go, and somebody will take it away from me at 100, but I keep the premium. Okay. Second choice is, well, second possibility is it's going to end up below 100. That means then those are like the 110s are going to expire worthless. And sure enough, on Monday immediately, I'm going to come and sell those. And I just looked, I will look at them. But last time I looked, next Friday's weekly options were $15 more. Imagine this. It's a $100 number. I took in 10 to sell the puts. Let's say I'm at 90. Now I took in 15 more. That's 75. Next Friday's is another $15 I'm going to take in. I'm literally making this like myself, making this an ATM machine for myself, literally, right? Now you're going to say, well, what if Bitcoin tanks, MSTR tanks, and this tanks? Great. It's fine. You know, I mean, if I keep doing this for the next 4 weeks, I may own MSTX for zero because of the high premiums. That's why I told you all, do not trade Bitcoin. Trade these. Trade the surrogates. There's so much more money, so much more volatility, so much more premium in these options. Okay. So long story short, the third choice is, people, is what? Stock is 102.5. Right at the end of the day, there is a little bit of premium left because those options are at 330 and 4. There's some data left, right? So they will be at the end of the day if the stock ends up at 102.5. Okay. So this is the quiz. If it's above, if assume it's at 102.5 at 5 minutes to 1, those options will be 2.5 to 275 range. I sold them at 15. Should I buy it back at 250, which is my right to do? Should I let it go at 100 plus the 15 I'm taking in? Or should I buy it back, wait until Monday, and sell another series of another round of calls? So that's the quiz, and that's the question I present to the chat. What should I do? Buy it back or let it go? If I buy it back, I'm going to gain $12.50 because I sold them at 15. I'm most likely going to buy it back if it's at 102.5 at 2.5. Okay, I lowered my cost by 2.5, and then I'm still in the game to come back on Monday. And I don't even have to wait until Monday, by the way. I can turn around and sell next Friday's calls today at probably 15 on one of them because the 110s are going to expire worthless, and I'm not going to buy them back. I'm going to let that go, meaning I'm still going to own the 100 shares. So here's the question. Do I buy them back and sell the next week's 100 calls for another $15? Or let it go at 100 and be happy with 25 points that I sucked out of it in 2 weeks? So that's the question. So let's go to the charts. Let's look at the charts. Charts. A little bit of a watch list action. So this is, by the way, MSTX, but let's start with the SPY. I mean, people, we're in an uptrend. We're in a channel, and we just keep grinding higher. What is there to say? I mean, I don't know what else to tell you guys. SPY, higher highs, higher lows. Bullish. Trend is your friend. Triple Q is making new highs every day, making another new high today. Let's look at the Mag 7 as usual. Apple, new high. Beautiful. What is there to say? Amazon, new high. I mean, a little bit of nosebleed here. Bezos is getting richer. So we were talking about insider sales. Bezos sold actually right at 200, about $4 billion worth of Amazon. Stock is 224 now. See, he left $24 on the table. I shouldn't be crying about my Carvana. I mean, he sold like I think 10 million shares or 100 million shares. I don't know what 4 billion is. This is too many zeros. AFRM, I've been bullish on AFRM if you've been following me. Almost a new high. This one stock that I just could not get in. It wouldn't give me a chance to get in. That was give me a little bit of a hiccup. And I was like, okay, I'll pull back a little bit more. No, AI. Look at the last power hours. If you don't guys believe me, look at those last power hours. Amazon. Anyway, so I'll stick with the Max 7 for a minute. NVIDIA is kind of underperforming. Hasn't made a higher high yet. Microsoft it's just breaking out now a little bit of this channel here. So that's going to be probably the next one that makes a new high. Google is also kind of underperforming. It's not doing that well. But Tesla, I mean, 52-week high. What is there? It's just built a little bit of had the flag, right? If you're reading your technical books, built a little bit of a wedge here or a bull flag kind of a pattern. And sure enough, boom, right? Okay. Netflix is the king of Mag 7. Holy crap, grinding higher every single day, $927 a share. What is there not to like? Actually, before I forget, let me look at those two stocks, SATL. Yeah, there you go. $2. Satellogic. Did you really ask me about SATL? Well, last 2 days the volume came in. The reason I probably said that is because the volume is coming in now. There is nothing. I look at how many shares are outstanding. The reason I probably said that is because it was like dead, and high frequency algos come in and pump the stock up. And I don't pay attention to too many $2 stocks, but there are a lot of people who make a lot of money and then don't get holding the bag. Be really careful if you're going to trade these. What I would highly recommend is that have tight stops if you're going to day trade it or if you're going to buy and hold it. SATL used to be as high as 8. I think it's in the right group. It's in the satellite group from the name of it. I don't remember you asking me this, but assuming you did, go look at Yahoo. Go look at how many shares outstanding there are and how many shares is trading. The other one is SLDP. SLDP. Yeah, I don't know what they do either, but this reminds me of my HOWL. Lower lows, lower highs. Why would you buy this? I don't know. Even if it's a buck, something can go down 50% indefinitely and not hit zero. Okay. Stock is a buck. There's a reason it's a buck. I don't even know what they do. It looks like Solid Power. Do they do batteries or something? I'm not sure. But no, I wouldn't be interested in this. Even if it's, why lose $1? I'm dealing with HOWL, which is this one right here. I have the same situation here. So at least this one is $3 in cash. And I'm buying it for $1.80. Okay. So that's going to be my dog of the year. I'm waiting. That's it. I am okay. So we looked at that. Let's look at Avago. Avago is doing really well. Yeah, approaching an all high, right? All-time high. Lovely. Now, one stock that I've been watching for months now that I traded quite often is ASTS. Okay, ASTS is AST Space Mobile. It's in the right place. Satellites and space. SATL was probably in that group as well. It's just going sideways, right? This reminds me of Lunar, LUNR. that have been going sideways, and all of us made really good money. So I am watching this to buy actually in my long-term portfolio, not the trading part. Another one that won't let me get in is Bloom Energy. These pullbacks are so shallow on these, and they're just gonna make new high. Good ones will not let you get in. That's why you got to bite the bullet and get in, and have the balls. Don't think too much. No paralysis through analysis. This is BITX. This is the 2x version of IBIT, which is the BlackRock Bitcoin ETF. CRISPR Therapeutics, biotech stocks, be wary, nothing there yet. ELF, this is one I have in my long-term portfolio, almost a full position, and it's going to be a full position when it closes above its 200 EMA. My cost is about 122. We're at 137. I'm going to hold this. I think this can get up to about 180 to 200. So in my long-term portfolio, I already said it. There's nothing else to say on that one. Robinhood for over 40. Is it really? Wow. Great. Look at that chart. Beautiful. I added IREN to my long-term watch list. I think it's at an all-time high, kind of testing 15, 16. If you do have it, if you followed me, I would take profits here. I wouldn't be a pig about it. Somebody had asked me, like, where do you buy an Archer? Remember those EV tolls? They did a secondary and they crushed everybody's soul, and then brought it right back. Look where we are. Hit $10. They did a secondary, brought it down to 634, and these wipeouts happened, but then we're kind of grinding back up. And Joby is the other one. Those are the man movers, battery man movers. Those somehow broke out, and then just keep going. Carvana, I'm out. I'm watching. Where do I get in? I don't know. I don't want to get in. I'm just kind of. I left. I think I left like $25 on this on the table. I sold it the gap day, actually, the earnings day. So yeah, I probably sold it about 230 levels, 260, 248. Not that bad. Kava, I sold it pretty well, actually. But on these buy on dips for sure. ASTS, I'm most likely going to initiate a position shortly. I will let you guys know. Let's look at the Bitcoin stuff. Let's see. Okay. All right. Lunar just did a secondary, crushed everybody like ACHR. I still like that stock. That's why I gapped down here. They're doing a secondary, raising cash. If Lunar gets down to the 50 EMA or anywhere there, and I'm around $12, 11 and a half, 12, I'm going back in. And you guys will remember, if you watched past Power Hours or Trading with Sergio, I was heavily involved here on the breakout. Hopefully you all made money. This is MicroStrategy. So please go watch those videos. You will completely understand how this is working now, okay? I'm going to go short on this. Not short the stock, but MicroStrategy is a Bitcoin proxy. It completely moves with Bitcoin. Whatever MicroStrategy is doing in their own world, in their IT business or software business, is worthless. Well, not worthless. Let's say it's worth 10 billion enterprise value. They bought more Bitcoin. Now they're up to 405,000 Bitcoin. Okay. So let's say Bitcoin is 100,000. What is their Bitcoin holdings? Okay. 41 billion. All right. 40 billion. Well, MicroStrategy now, as of yesterday, has 231 million shares outstanding. It's at 400. 231 million shares times 400 is 93 billion. So it's still selling 2.1 and 2.1x times its NAV of the Bitcoin holdings. So the way I value MicroStrategy is this: 40 billion in Bitcoin holdings, 10 billion for the actual company. It's 50 billion. It should sell about 1.5 to 1.7x. Should be about 75 to 80 billion, not 90. That's why a lot of people yesterday, Bitcoin broke 100, MicroStrategy went to 450 and ended up red. And options must be sold on these, right? So what I'm trying to explain to you all is that this will move up with Bitcoin, but then the premium is being taken out and shot in the back by Wall Street. And that happened at 540 when I was selling calls. You guys will remember that. Go watch the old Power Hours. You guys have to understand the game. Okay? Yeah, Bitcoin. So at some point, this 2x, 2.1, 2.2x MNAV. MNAV is multiplier of net asset value, meaning what their Bitcoin holdings, okay, plus the enterprise value is 50 billion. Okay, now Bitcoin goes, and today I have a video coming out. Please go check that out. I am explaining more. So I am long 200 shares of MSTX, which is the ETF of 2x ETF of Bitcoin. 102.70, it's going to be close. Get your answers ready. I'm interested in your answers. What should I do? Let it go, buy it back, and sell the new options. What should I do? Please let me know. Okay, LO. They did a secondary. I like these types of charts. It's going sideways. It's building a massive little, pennant flag or a diamond here, actually. Right here, there's a diamond. 50 EMA is at 19. Stock is 20. I'm definitely a buyer. I'm just kind of waiting for the secondary to finish. Okay. Let's see. That's the nuclear stocks. They're very, very, in vogue now. NNE is one of our people said that at around 10. It's 27 now. Nanonuclear. Let's look at Mara, which is become just like a small Michael Saylor type now. Not only they're the best miner in the country, they have about 35,000 Bitcoin. So go look at the Yahoo webpage, finance page about this company. MARA is the symbol, Mara Holdings. They did what Michael Saylor is doing. They just issued 1 billion of convertible. In fact, the explanation of what Michael Saylor is doing and what convertibles are is coming out on a video, I think this weekend or Monday. So I'm trying to keep pace, so educate you guys of what's happening, because I don't want you to blindly get in there. And like yesterday when Bitcoin broke 100,000, everybody jumped on MicroStrategy and then they ate by 50 points. I mean, do you guys have to understand the game? Once you understand the game, you can act accordingly. Don't be a fool on these, Reddit, beautiful chart. I mean, these are the types of charts. Like, okay, here's a catalyst. It was the earnings. It was at 100, 104, 105. All you have to do now is let it go. Let it ride. Not let it go. I mean, let it ride, right? We're at 160. When an uptrend is, these are the buy on dips type of stocks that I'm trying to explain to you all. Roku has become one of those. It's about to break out. Actually, it's breaking out now. Okay, so I am going to open a starter position in Roku in my long-term portfolio. Most likely today. Starter position, by the way, when I mean that is, if I'm going to buy $100 worth of Roku, I will buy $25 worth, which I did with PLL. That's kind of Piedmont Lithium. That's just kind of going sideways. I have a starter position about 12 range. If it goes above the 200 EMA at 14.5, 15 range, I'm going to go to a full position and hold. Because this was a $70 number. Not because of that, but because of the business and everything else in the chart, obviously. Roku, I'm definitely going to open a starter position after I hang up here with you guys. Yep, I like it. Wasn't Roku in like 400 range 3 years ago when the pandemic was happening? I think Roku is actually a perfect. Yeah, I love these types of charts. $400 or $270, $300 number comes down. Base, just breaking out now. Yep, long-term portfolio. This is not a trading tool. You have to treat them differently, people. You can trade options in and out, but you have to be right in the direction and the duration. So Roku definitely long-term portfolio candidate. What else? Serve Robotics breaking out. That's the Bug Eye Robots in LA. That's been going sideways forever. Yep. After, I love these when they go sideways and then the volume comes in, they decide to pick it up. Coming into a little bit of resistance at 12.5 range, 1270 range. And nothing spectacular, but not to be thrown away. Soundhound, Mojotronics. You bought and sold it because you wanted to make 50 cents. Look where we are. Sometimes when these breakouts happen, I mean, this is a perfect example of what I like. Massive move, sideways, 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 bore you to death, and then it starts going. Once it gets going, nobody knows where it'll stop. And sure enough, let's take a look at Uber. Definite breakdown, garbage, complete utter breakdown. I mean, under is 200 EMA while the market's making all-time highs. This is called underperformance and outperformance. Uber definitely underperforming. The high was 87. We're at 65. I'm pretty sure we're going to get to 55, and maybe there we'll take a look at it, but not interested whatsoever. Wayfair, no, it's okay. And then last but not least, Zillow was the one, right? So it's kind of doing this a little bit of a pullback just like it did here before the next leg up. I am interested in that. It's not in my portfolio, but I'm definitely interested to be on the watch list. And I'm going to answer some questions and say goodbye. So, reminder. Reminder. What's my reminders? I have 2 reminders. Okay, here's the reminders. Next, this Monday coming up, I'll be there. I'm going to read the answers of what I should do with MSTX. Okay, so Monday I'll be here for 10 a.m. Pacific, 1 p.m. Eastern for trading with Sergio. Wednesday I'm traveling to Tampa to launch InDrive in Tampa, help them launch anyway. We need competition in this business, and I think they're a solid competitor, but they're a little misdirected, misguided. I think I'm going to straighten them up. So Wednesday, I'm not here. Sorry for the members only. We have to skip that one. But by then, 2 few more of you will have the shirts, so we'll all have the shirts. Friday for Power Hour, like today, I'm not going to be there. I'm traveling. I'm coming back on Saturday, so I'm going to miss those. But there's enough content, right? You guys don't miss that much, and there's enough content to keep me alive on the channel. So please go check it out. Put a thumbs up. But I will see you all Monday. So let's see what they do. Batteries. Okay, cool. Okay, so let's see what my crowd said. Okay, so let's pick this up back here. Martin, no, it's a dollar stock. There's a reason it's a dollar. Okay, MSTX puts. I explained it, so I'm going to read the answers of what you guys want me to do with that 100 shares, because I don't think, well, I mean, anything is possible. If it's under 100, the answer is easy. I'm going to let them expire worthless. If it's above 100, I have 2 choices. Let it go or buy them back and then sell, immediately sell, not wait until Monday. Immediately sell the next Friday expiration $100 calls and take in another $12, $13, $15. So those are the choices. MSTX right now is 102.82. Okay, we'll see. Okay, take a B. Midwest market open 8:30 a.m. Robinhood mobile being this. Nah, you're confusing yourself. Don't pay any attention to any of that stuff. Long candle, short candle, that means nothing. Don't. You're confusing yourself. You're just creating some sort of bias now. You're creating something that's not there. Yeah, that's not there. You don't know the day range until it happens. You just don't know. Unless you came up with something that nobody knows, but you're creating bias. I wouldn't do it, you know? Takeby says, I'm getting confused in Robinhood Mobile for what the market open price is between 2 a.m. and 8:30 a.m. Do you mean the 24-hour market? Yeah, it's kind of goofy there. I mean, they have a 24-hour market. That's an internal system. I don't know what it's called. But pretty soon, I think, isn't Nasdaq going to like 24-hour trading or 23-hour trading? Martin says, let it go. Okay. Crystal says, let it go. Okay. Okie dokie. I will let you guys know what I did on Monday. Well, you'll see the positions at the end of today anyway. Who won the game? Nobody ever went broke taking. Yes, 1,000,000% correct. But, okay, there's a but. So if I buy them back, I'm going to gain about, let's say it's 102. I buy them back at $2. I sold them at 15. That's a $13 gain. And then I can turn around immediately, sell next Fridays for another $15, which I will look at it in a minute. So you guys have to consider that. I'm not just going to buy them back and sit on it until Monday. I'm immediately going to roll them into next Fridays. Take another 15. And if by next Friday, if it's at 100, I want to create like my little ATM machine with MSTX, MSTU, MSTR by selling premium. If I own the underlying, I can keep selling premium. I mean, when I sold them on Monday, 10 and 15, look where they are. So I keep lowering my cost basis. So you guys have to think a little bit, smarter. Edward says, rinse, repeat, sell now and sell naked puts again. Yeah, that's a possibility. In fact, I came really close to selling 90 puts yesterday when that was big reversal happened, but I couldn't get there. I put them at 7. They got to like 6 or 625, I think. Okay. Well, how about this, Edward? Instead of doing that, opening a new position, existing position, keep it and sell calls, keep selling calls. And then at some point, it will be taken away. How about that? You guys think about that, right? So I can keep selling calls. And then if it's end up at 100 or below, week after week after week, at some point, we know it's going to be above 100 and it's going to be taken away. But by then, I may be lowering it $10, $15 a week, my cost basis, over and over and over and over, right? Yeah, that sounded like they do batteries. Yeah, I have like a few other stocks. I don't know. SQ, I'll take a look. Vic says buy it back. Okay, buy it back and sell the other ones. Techie B says with a question mark, buy it back. I can always buy it back. I sold them first, now I buy it back. It's the same transaction. Buy first, sell later, or sell first, buy it back later. You can always do that. SOUN has it. Yes, it has. Definite buy on dips though. Don't touch it. I wouldn't touch it. Sorry, at dogs, I missed the quiz question. It's okay. Crystal says, roll MSTX call next Friday to 110 strike. Another great suggestion. Yes, I can do that. I think they're about 12. Actually, you know what? When I enter that question, who was it? SQ. I'm going to look at SQ and I'm going to look at the calls for Friday and next Friday. And UMAC. Okay, that's another suggestion. Yeah, UMAC is getting to a buy point, actually. When is... He's only interested in shrimp tacos. I don't know. I'll let you know. You're in LA. I'm in LA. I gotta hopefully this weekend. We may meet one of our contributors that just came from New York, so we may all do lunch together. Okay, I'm gonna look at this. This is actually an interesting suggestion. I thought about it, but why not the 100, right? Well, 110 gives me a little bit more upside. Yeah, I agree, but I'm gonna look at the. You know what? I'm gonna look at it. I'm gonna look at it now. Okay, let's look at it. Okay. SQ. Beautiful chart. Buy the dips. Broke out at 75. We're at 98. Long term is probably higher than this, right? PayPal is doing the same thing, by the way. SQ and PayPal are going together. This is the 3-year. Yeah, lovely. Buy pullbacks. Buy dips. No ifs, no buts. Let's look at PayPal. I haven't looked at PayPal for a while. Yeah, almost the same. But I like SQ better. SoFi is great. SoFi is doing SOFI. Wonderful chart. And SoFi. Yeah, look at that. I mean, come on now. Beautiful. UMAC. Let's take a look at UMAC. UMAC at 889. Yeah, we have a 7.5 maybe. 7.5 maybe. The volume is contracting. It got pumped because Trump was put on the board of directors. It's a satellite. I mean, not satellite. It's a drone company. Supposedly, when Trump is kicking the illegals out, according to him, he may be using some of their drones. I don't know. I'm pretty sure they're already using some drones. This could be the proverbial pump and dump, actually. Yeah, 7.5 probably, right on top of the 2 on the EMA. Bollinger Middle is about same price, so somewhere in there, I think. I mean, the other thing is they may do a secondary, probably a 5.5 or some shit. I mean, this thing is 24. This will rally without a question. Where it will rally, probably 15. It'll double from here and then roll over again. Yeah, I looked at this. This is like, yeah. I mean, this was a dollar number. You guys gotta always be mindful of that. So okay, let's take a look at MSTX options, and then maybe you guys will change your mind, and then I gotta go. MSTX. Okay, so these are the next week's, but let's look at today's. These are expiring today. So my 110s are going to expire worthless, I'm pretty sure. Stock is 103, though. Who knows? What if it rallies at the end of the day to 110? Then both will be taken out. I mean, you never know. You can never say never with these volatile stocks. So, okay. So here's, you go see the short versus position. So I sold them at 15. They're 340, 420. Stock is 103.40. Yeah, almost all the premium is gone, and this is the 110s. They're 20 cents, 40 cents. 110s, I'm definitely going to let them expire. I'm not even going to think of buying them back. But if it's over 110, then they're going to take that away as well. So let's look at next week. These are the 13th, next Friday. Okay. So next Friday, 100s are 14.30, 15. I'm pretty sure I'll get midway 15 out of it. 15.30, so 14.75 range. And next week's 110s are 10.5, 10.70, 11.10. So I'm pretty sure I'll get 11-ish, somewhere in that range if the stock is here. Yeah, I think I agree with, who was it? Somebody said sell the 110s, roll them to the 110s, buy them back and roll them to 110s. That's another $10. Yeah, 10% more upside. Yeah, I think it's a good idea. Well, 110s, I'm definitely, once they expire on Monday, I'm going to sell the 110s, the ones that are expiring today. 100s are a different story. I'm just kind of hoping that it closes at like 99.80 or something. They both expire worthless on a Monday. I come in and hammer these 110s for next week. Some fool will buy this. And then let's look at the 90 puts, or 95 puts are $10 for next week. I will start doing that because I want to own about 600 shares of this in total and make my ATM machine. 90s are $7. These have implied volatility of 245, people. I mean, come on now. What's happening here? 85s for next week are $5.50. Hundreds are $11. So I wouldn't do the hundreds, but I will do the 90s at 7. And then if it's below 90 by next Friday, that will be also selling the calls as well. Because now selling calls on this is a no-brainer for me. So I put a strangle on. Last time I had a strangle on. I'm going to do the same strangle here. Let's look at the 150 calls or 160 calls. So I could do a short 90 puts and short 160 calls, combined about almost $10. Yeah, so a lot of people think because Bitcoin broke 100, these are all going to fly. They're not. MSTX is going to move with MSTR. And I gave you guys the rundown on MSTR. So I don't think MSTR is going anywhere. That premium is just, yeah, MSTR is not going anywhere. So, all right, that's it. Yeah, I'm a Crystal. I think you're right. I think I may do that. Well, I'm definitely going to do that on Monday with the 110s that are going to expire worthless. Yeah, UMAC about probably 7.5 range. If they do a secondary, yes, he did. But what does that mean? I don't know. Stock Squad. I like it. Stock research, yeah. Stock Squad. What do you guys think? So email me, Sergio@sergioavedian.com. Members team name. All right. I wish you the best of health. I wish you guys great weekend. I'm going to be here on Monday for Trading with Sergio. I'm going to miss the members live and power hour next Friday because I'm traveling, but I'll be back next Monday with a jet lag probably. But I will be on Show Me the Money on Tuesday, and then Wednesday morning early I'm taking off. And let's go compete. Let's see if we can compete with these big boys. But anyway, so that's a different story. Hope you guys enjoyed it. I will put the positions on, my positions, on the community page, Monday, Wednesday, Friday, so you guys can go check it out. Yes, please be safe out there, and much love. Stay healthy. And you guys will know what I did, but if you look at the positions, you'll know what happened with MSTX. Did I buy it back? You guys will see on the positions. At the moment, the position says 200 shares, -1 on 110s, -1 on the 100s. So you guys will know what I did. If I bought it back, then it won't be -1. It'll be -1 next Friday's 110s or 100s. So you guys will know. All right. See you later. Yes, no member live this week. I apologize. Sorry. Well, it was every 2 weeks anyway. We moved it to every week. So I'll be back to every week. Come on now. Chill out. All right, Mr. Shrimp Taco. All right. See you guys next week.